Good morning, it's Harvey Jackson. We're just going to go through what some of the expectations are, and of course I'm not going to nail the number, I'm not going to even try, but just the expectation that the WASDE report is probably going to have lower yields. There's been a lot of talk about rust in the corn impacting yields, as some guys, farms have been going into some of these areas, and they're lower than expected yields as they get into it. It looks fantastic, but the yields have been pinching or the disease have been pinching the yields. Not only that, you can see here a month ago versus current. You can see August versus September yield monitor. There's a lot of drought in this area where it wasn't in the August slider. It doesn't look like it's going to actually cover a big part of it, but it's covering a significant part of the corn and soybean growing area. Just change gears here a little wee bit. The Fed rate hike or Fed rate is increasing its bets on decreases here for sure, and the market is getting some lift with that sentiment. Indian inflation rate rose for the first time as well. Not that it's all that significant, but what is interesting there is they managed to keep the inflation down quite a bit for quite a long time, and they actually had food prices decreasing for the first time, which is interesting. Here's an article, maybe just to throw it out there. It was put out by Bloomberg, and the Canadian Federation of Independent Businesses states that small businesses of 24 employees pay 24% more in income, payroll, and property taxes than their American counterparts. Just an example here, I'll point out small businesses in Quebec pay $425,000 compared to companies of the same size in South Dakota, paying $246,000. Small businesses in Saskatchewan, for example, which pays the lowest taxes, pay $27,000 more than the U.S. average as well. So it's just on average, it's 20% higher taxes, and that's just causing all kinds of pain in the country just for productivity. Like, if you're going to set up business, where are you going to set it up? Where there's going to be a lower tax base. Just the cost of healthcare. The Fraser Institute put this out, and I thought it was just interesting. From I think the comparison is 1997 to now, and that's how much it increased in just the collecting of taxes to pay for healthcare. Weather, you can see there's still active weather in this region, nothing in this region, and that's part the drought, but it's also going to speed up the harvest by quite a bit here as well. You can see the active weather continuously rolling over into southern part of Saskatchewan and Manitoba, where the harvest is going to try to keep going. You can see, depending on weather model, you've got unsettled weather in all these regions for the next 7 days. So we got to hope that it's going to maybe just give us an open opportunity to be able to get some harvest done. But I'm thinking it's going to be a little bit longer than we think. Canola trading up about 2.5 to 634 to 646, depending on which month. Rapeseed is up 468 per metric ton. Soybean oil is trading around the 51.78 cents per pound. It's up 0.18 of a cent. Palm oil is slightly down. Crude oil is trading right at 62.82, and that's up $0.75 per barrel. Soybeans 10.33, so that's basically flat, and your wheats are basically really unchanged, and the Canadian dollar is just slightly up as well. So just a quick look at some of the charts. You can see that we've got a nice little bit of an uptrend in the last week and a bit, where we made a low, and now we're recovering off of there. I don't have any confidence that the seasonality is still going to kick in. Harvest is going to start to ramp up at some point, and that's still going to put a little bit more pressure on this, unless the yields are going to come in a lot less than expected. I don't expect it to have a big pile of upside unless we get some support from the rapeseed or the veg oil complex, basically. So rapeseed, same little bit of an uptrend up towards the top end of this downward channel. Currently trading $127 differential of the Canadian canola versus the European rapeseed priced in Canadian dollars. That still could be encouraging to get some exports in that direction, or take some of the sales that they might actually make as well. Soybean oil futures, I did have a trend line in here. We have broken down below that trend line, and looks like we're trading right at some of the short-term moving averages and staying below them. Your soybean futures, there's a head and shoulders here. Now, what direction is this going to go? I would love to protect it from that side. If you guys need to make some sales, I would be putting some sales on, even at where it is, but expect some. If we get a good pop, you probably want to be selling anywhere in the top, where that head was, for sure. Crude palm oil futures still supportive, basically maintaining this upward trend. Canadian dollar, this last week and a half here, has been trading all down. Support right here at the 72. US dollar index trading down as well. Here's, I don't know why that one ended up here. So your Kansas wheat futures actually trading down, and Minneapolis is trading down as well. It just, the chart never got in there. Your Chicago futures made some new lows yesterday and then traded pretty nice green candle up, but still very end, or bottom end of the range. Your milling wheat is trying to consolidate there as well. And yet when you look at your corn futures, so this is a longer term trend line that I have on here, and it looks like it's trying to peak above it here. And I expect, with smaller yields, there's a very good possibility that the algorithms will be trading that as a positive. Your live cattle futures, the last couple of days after that big down day, we've been recovering. And the same thing with the feeder cattle. One thing that it has done is actually given some support to some other meats like the hogs here. And that's all I have for you today.